Hello everyone and welcome to another edition of the technical market update. Okay, we're recording this update a bit early today at 1:45, and so far the market is down considerably. We see that the S&P 500 is trading at 2078.55, down on the day. Now, yesterday I spoke about the fact that we were in a slight consolidation on the S&P 500, and the market currently is trading slightly below that consolidation triangle, which is not good for the bulls. It could signify that the market is heading down further. Again, as I said yesterday, critical support is at the 2040 level. You just put it here. This 2040 level is critical support in the markets. And for those of you who are not familiar with technical analysis, this could possibly be a double top. This means that the market finds a high, comes back up again, finds a high, and is now heading back down. Now this pattern is not concluded, or it's not set in stone, but this is what is happening currently. We are currently also at another support point where the market could bounce off of this 2077 level, and we get a rally if the bulls come in. But right now it doesn't look like there's any buying pressure in the markets. Looking at the Dow Jones Industrial Average, similar situation with S&P 500. The market is trading down. Critical support is at 17,600, and longer term support is at the 17,000 level. The Nasdaq is also down on the day and is coming up on its support area. Critical support in the Nasdaq is at the 4,300 level, as is indicated by this blue line. Okay. Hello? Hello? All right. 3, 2, 1. Taking a look at the US dollar index, the dollar is down on the day also. So we have stocks moving down, and also the dollar is moving down, and we're currently coming up on support in the 93.25 level on the US dollar index. Remember, we had a fairly large rally in the dollar, and how markets normally work is that at some point the market tends to want to correct this rally. So that could be what is shaping up for us with the US dollar index. Gold is also down slightly on the day. We see that although the dollar is losing ground, gold is losing ground also slightly on the day. And the good news for the bulls is that we're above this 1180 support area. But the bad news for the bulls is that we are not above the 1220 area as yet. So this is definitely a market. If you are long or short, you have to keep an eye out on. Critical support is down at 1140, and resistance is up at the 1220 level. Taking a look at crude oil, the market continues to rally off of the bottom that was made in mid-March, and the market seems to be trying to correct this large move down that occurred between June of 2014 and March of 2015. Okay. Taking a look at market of interest is Australian stock index, and look how the market is definitely flying below support. We had support in the 5,700 level, and market is blowing through that support area, and sellers are definitely coming in after that new high that was made in the Australian stock index for the year. Looking at over in Europe, we are also down on the German DAX. German DAX also down on the day, and the market seems to be correcting this massive move up on the DAX. Support is at 11,322. The market closed right on support, and the resistance is up at the 12,000 level in the DAX. Okay, so what's happening? For the S&P 500, let me just head back to the S&P 500 one moment here. And all I can say right now is that we have to be very careful in this region, because the market has had this is a weekly chart of the S&P 500, and as you can see, the market had a very strong up move, and we have to pay attention to see if this selling wave that is occurring now becomes bigger, because what we don't want to happen is to be caught off guard like what happened in 2008. This is definitely not a time to be complacent in the markets, and it could be a time to get a bit defensive with your positions, because this rally has petered out. And just for reference, we started the year at 2058 and we're now at 2075. So nothing really much has happened on the S&P 500 in the first 4 months of the year. Okay, if you are listening to this presentation and you want to see the video analysis, you can go to smartinvestorcentral.com and sign up for these daily alerts. I can assure you that if you pay attention to these daily alerts, they are normally 10-12 minutes long. If you pay attention to the daily alerts, you will find opportunities out there, and more importantly, you'll know what is happening in the markets. And one of the reasons why folks were caught off guard in 2008 is that they didn't know what was going on in the market. So when the markets declined on them suddenly, they were caught off guard. But the decline that happened in 2008 was foreshadowed months before, and what's important is that if you were paying attention, there were opportunities to get out before the market went down. Okay, thank you very much for listening, and let's see if anything changes between now and the end of the closing day. Thank you very much for listening, and have a good day.